Welcome to Parametric Finance. I'm Chris Wetsky, the company's founder, and in this video tutorial I'll give you an overview of how to secure financing for a shareholder succession using the tools and resources provided by Parametric Finance. First, a little about us. Parametric Finance was founded in 2008 to provide technology-enabled corporate finance services so that smaller companies could obtain the kind of sophisticated, structured finance advice that larger companies often relied upon to fund major business initiatives, such as expansions, acquisitions, or shareholder buyouts. Parametric Finance makes corporate finance affordable to smaller companies by enabling them to conduct the financing themselves, with online tools to analyze their financial information for appropriate financing strategies, reports and templates to prepare the pitch materials, recommended financing sources for the financing strategies being pursued, and then, if still necessary, professional advisory services to fill in the knowledge or capacity gaps. Let's see how you can use all this to secure financing for your business strategy. Okay, so you want to transfer part or all of your business to family members or members of the company's management team. From a legal transactional perspective, there are many ways of achieving this, but for this video tutorial we'll assume the simplest approach, which in our opinion would be for the company to recapitalize itself entirely and then issue fresh equity to the desired shareholders post-transaction. The process begins by assessing the overall value of the business as if it were being sold to an arm's-length third party. In other words, we first test for the potential purchase price of the entire business, as this is the value of consideration to be received by the transferring shareholder. Using your internet browser, go to the Finance Tester page at our website and enter the most recent annual financial statements into the input panel. The purpose of financing can be set to acquisition of business or sale of business because in either case the financing inflows will be reflected as an equity extraction. The Finance Tester is a free online tool that instantly shows the types and amounts of financing potentially available, as well as the numbers of funders in our database likely to be interested in your business based on certain key criteria. You only need to pay attention to the green cells, which we've kept to a minimum. See our guide to completing the Finance Tester on how to enter financial information, as well as tips to improve financing capacity. Consider normalizing or adjusting the income statement and balance sheet to reflect how revenues, cost of sales, and other financial statement amounts are expected to trend over the next 5 years. This can be done by adjusting the starting amounts and the annual growth rates. If the indicated maximum value of the business on the right side of the sources and uses table is acceptable to the transferring shareholder, you may want to take the next step of refining the financing strategy. It's completely confidential because data is not stored anywhere. If you refresh your browser, it's gone and you have to start over. So if you want to refine the preliminary strategy you've identified, print the page somewhere for reference in the next step. So the first step established that a financing was worth pursuing because the maximum business value was satisfactory to the transferring shareholder. What happens next depends on what the transferring shareholder wants to do with the equity component of the sources of financing, which represent the estimated maximums for the types of financing within relevant market parameters. If the transferring shareholder wishes to receive cash proceeds for the value of the business, then the equity component will likely have to come from third parties, and the transferring shareholder would essentially be divesting and exiting from the business. However, if the shareholder wishes to control the conveyance of the business to certain individuals who may not have sufficient financial capacity, then the shareholder will need to accept ways of carrying or financing the new shareholders by converting the shareholder's equity to a form of capital other than common shares, such as subordinated debt or preferred shares, and then issuing new common shares to the go-forward shareholder group. In this example, we will assume the transferring shareholder's equity value will be frozen as redeemable preferred shares. Due to the legal and tax complexities of executing this type of transaction, qualified legal and tax advice is crucial. To explore this financing strategy in greater detail, we've developed the Finance Starter, which is also a confidential online corporate finance tool that features the ability to override the theoretical financing amounts with the intended financing amounts, which can be seen at the bottom of the input panel, as well as adjust certain financing parameters which can be seen on the right side of the input panel. The Finance Starter comes in two formats, the Finance Starter T12M and the Finance Starter F5Y. The Finance Starter T12M, or trailing 12 months, is like the finance tester in that it only requires the historical financial statements, as would already have been entered in the finance tester. The finance starter, F5Y, or forward 5 years, allows input of a 5-year annual income statement and balance sheet forecast. It improves the reliability of the financing strategy where broad escalators for various financial statement amounts don't apply very well. Shown here is the Finance Starter T12M version. See our video tutorial and guide detailing completion of the Finance Starter F5Y. Under one of our membership plans, go to the Finance Starter T12M webpage and re-enter the company and financial information from the Finance Tester in Step 1. This will only take a minute and you'll again see the maximum indicated financing strategy and number of funders. Reconsider if any normalization adjustments should be made to income statement or balance sheet amounts to reflect amounts or trends post-closing. You can adjust the variable financing assumptions if you feel strongly that our market-based starting points are way off the mark. See one of our guides to completing the Finance Starter for examples of the types of scenarios that might warrant an adjustment of these financing assumptions. In the video example to the right, we've left these unchanged. To override the indicated maximum financing amount to reflect the equity extraction to be financed, in the box below the chart of funders, change Use Indicative to Use Override Below, and then enter the specific amounts for each type of financing in the green boxes to the lower left. We suggest you start with the amounts close to or less than the amounts shown in the indicative financing, so as to avoid breaching loan advance rates, as well as financing covenants, which are shown in the lower right corner. Ideally, these numbers should be white or green when you're done, as red means close to breaching or breached. In the video example, we have played around with a few numbers before settling in on the preferred financing strategy that reflects acceptable financial covenants. You may also notice that in the video example, 50% of the shareholder value of $30.5 million was extracted by way of a debt financing, so the other 50% would represent the fixed redemption value of the preferred shares. Again, qualified legal advice is very important because equity securities are very complex. When this is all done, the financing strategy report can be ordered to provide all the required financial information, analyses, and tables for use in the presentation materials that will need to be prepared to pitch the financing. When all the financial analysis is done, the third step is to market the presentation to prospective financing sources. Referencing our guide to preparing financing marketing materials found in the members-only section of the website, we suggest that the first pitch document to prepare would be the Confidential Information Memorandum, or CIM, a template for which can also be found in the members-only section. From the CIM, a teaser and slide deck can easily be created. The Financing Strategy Report provides all the tables to be copy-pasted into the CIM. You will just need to provide the appropriate commentary, as explained in our guide. The Financing Strategy Report provides a list of potential funders whose preferences match company attributes and the proposed financing strategy parameters. You'll need to contact them, selectively, to provide the pitch documents in the appropriate way. See our ebook 10 Steps to Financing Your Business for how this is best done. Before you know it, you'll have a bunch of meetings and requests for the CIM, which, if successful, will lead to a number of financing proposals. The final step of the financing process involves the documentation work required to close the funding. This begins with the term sheets or financing proposals received after presenting the financing to prospective lenders or equity investors. The meetings and financing proposals will likely give you a good feel for your preferred funders, but we still recommend that you backtest the financing in the Finance Starter version originally used, just to make sure the proposed financing, reflecting the proposed terms as much as possible, will still suit the company. Executing the preferred financing proposal or proposals will then lead to formal legal documentation and funder due diligence. This will vary widely by the type of company. Asset-intensive businesses may require appraisals. Company-owned properties may require environmental assessments. And of course, security registrations will be necessary. Be patient, as this process can be somewhat time-consuming and costly, but unavoidable and ultimately worth it in the form of a funding for your equity extraction to facilitate a shareholder succession transaction. So to summarize the overview of financing a shareholder succession transaction, the first step is to test the company's overall value using the finance tester. If it turns up negative, carefully review your financial inputs in terms of your starting historical numbers and growth rate assumptions, and see our guide to completing the finance tester for ideas on how to improve financing capacity. If it turns up positive and you'd like to pursue a financing with our help. And the second step is to refine the financing strategy using one of the two versions of the finance starter under a suitable membership plan. This will allow you to adjust financing assumptions, enter the specific financing strategy, and access a host of guides and templates. Once you've settled in on a satisfactory financing strategy, purchasing the financing strategy report will enable the third step of the process, which is to prepare the presentation materials and pitch the financing to a selection of prospective funding sources, which will have been provided in the financing strategy report. Upon receipt of financing proposals, the fourth step is to evaluate and select among these financing proposals and proceed with the preferred ones through a legal documentation and funder due diligence process, which should ultimately result in completion of the financing process, funding of your equity extraction, reorganization of your share capital, and ultimately achievement of your shareholder succession transaction. I hope you found this video tutorial to be helpful and would welcome your feedback to help us improve. To learn more, explore the other resource materials at our website or call us to discuss your financing requirement.